Warriors, who's ready for the doubleheader? PPI today, CPI tomorrow. I think the headline from Jim Welsh was no relief on the numbers. So we'll see. We'll see if the dollar could accelerate to the downside or not, or is digging in its heels. And God, I have the whole team here. I always start off with Ryan. So,
Good morning.
I'm going to start off this time. I'm going to start off Kman.
Oh, you set me up and then you drop me dead. You set me up and you drop me dead.
Go ahead, man. Just don't assume even though 100% of the time you've been the leadoff man of our baseball team here. You get on base, though, Ryan. So, we're going to keep you there. And then you set up K-Man to drive you around the bases. So you guys know what baseball is over there, right?
I was going to say, Dale, I don't know if they have a great understanding of baseball.
Excuse me. This was yet another sport that you took from us. It's called rounders over here.
I thought it was cricket.
No, that's another one incompletely. But yeah, you stole our game of rounders and called it baseball, and then you create a World Series that only you can participate in, and blah blah blah. Anyway, go on.
That's a true statement, and we can't deny that. That's a true statement. We should own that.
Wow. Oh,
World Series,
learned.
Not so World
I tell
Series.
you what, I learned a lot in here. All right, I didn't know that. Anyway, so expectations for PPI, bro.
I'm passing out to Kman. I'm passing out to Kman now.
Oh, you are? Okay, K. What's the number? The market.
Good morning, Dale. I know nothing. I will tell you everything.
All right.
I think CPI is going to be more important. That's for one.
Yeah.
But yeah, expectations are for a little higher. I wouldn't be surprised that those inflation data come in hot because everybody is trying to front run whatever's going to happen once Trump is taking the seat. So I wouldn't be really surprised at all, really, if those inflation data today and tomorrow are going to be hot.
Okay. This price action that we've had in U.S. dollar yen feels a little bit like Rip Van Winkle.
Yeah.
It's trying to lull the market's lulling us to sleep.
The thing is, there's a couple of things happening there. Well, first of all, we're rejecting 158s, but then you also see bids coming in at 157. We had the Bank of Japan deputy governor out overnight saying that he wasn't sure yet about the rates, so everybody's buying it again. But then I've also noted that the JGB yields are creeping. No, actually going up, not even creeping, going up because we are above 120 in the 10-year, which is about where the government would have expected those yields to end up. And but perhaps they are looking more at the short term. Yeah, it's interesting that the yen isn't finding more support on the back of higher yields over there. Yeah, so I think we're going to range until Trump takes the seat, and then right after we get the Bank of Japan, we're going to have some yo-yo, I reckon, over those CPI data. If the market is, I would say, clever enough to know what's happened on those front running, and we get hot numbers, we may see a bit of dollar demand again. But is it going to last? I don't really know. I think we're ranging now up and down and in the middle until Trump takes a seat, and then we'll see what he wants to do.
Okay. I don't know, Blake, if you stuck around for Fed guy, but
I did listen to a lot of it. Yes,
but he talked about Canada. All right, so he I guess he's not a precise trader. He's a little bit more macro, but he's buying Canadian dollars, and I know you want to sell it if higher.
Meaning I do want to buy Canadian dollars. Yes, that is correct.
Exactly. Right.
Yeah.
So maybe we take the stops out here. There's at least one stop above this high, because it was reinforced by not taking out that high here. So,
Yeah.
you know, and every short has their stop. I mean, retail stops. 1/10 of a pip above this high. Anyway, so he's bullish the Canadian dollar, and he's taking that and he's buying natural resource stocks that pay a dividend in Canada. So, you know, if you get appreciation on, you know, being in the right currency and being in those kind of stocks. So, you know, I just want to let you know that's, I think, you know, he came out and talked about his positions in the market, which, you know, a lot of guys don't do. And, you know, he kind of, you know, doesn't really come out like that often. So it seemed like there was some pretty good conviction that lines up. And he's coming from a different standpoint. You're more technical, although you like the fundamentals of new leadership there. He's looking at all the plumbing too,
And
you know.
you know, along the same lines of Canada, you know, I've actually been watching some interviews and doing some reading regarding that. And you know, the Bank of Canada has lowered rates to a point to compensate for a lot of the mortgages that are being, you
Oh
know,
yeah,
they have a different
they're
structure.
rolling.
Yeah, they're rolling, and you know, 3 to 5 years, and you know, people were expecting this year to be a really bad year, but the Bank of Canada has been accommodative and brought down rates to a point that I think is more doable for Canada. And with, you know, I guess a lot of it's going to be with whoever the new administration or whoever the new president is, you know, in Canada, or prime minister. Is it prime minister or president? Think about that for a second. Anyway, that's a 5:30 in the morning question I'm trying to ask myself, but it is one of those
Prime
things
Minister.
that Prime Minister, yeah.
Yeah.
I can't believe I just said president. Early in the morning. But that it is, I think technically, yes, I'd love to see the dollar CAD take out highs and then show us a reversal. You know, one of the big things that I think we haven't talked about, but one of the big things that moved the market yesterday, and I guess I can take over from here, is yesterday when I was updating analysis, and it was towards the end of the day. Well, it was the end of the day as I was updating through the basic technical analysis on all of, you know, Forex Analytix, and I tend to do that. Well, I do it for all 30 instruments that we cover, which is just isn't currencies. I mean, I'm covering Bitcoin and, you know, S&P and DAX and everything else. The dollar started to sell off, and there was this Bloomberg article that came out right at the turnover, basically, you know, the dead zone, if you will, in the FX market, which you know, you can see it right here. The euro started to take off, the dollar started to sell off, and all of this was due to a Bloomberg article that said that that Trump is the Trump transition team is, you know, this is the article that came out. They're studying gradual tariff hikes under emergency powers. So their plan would to be to have 2 to 5% a month tariffs, and until they get what they want, they're going to continue to increase that, which is bigger than much less than the 10% right out of the gate that Trump was talking about. And this is to help alleviate, you know, inflationary pressures. And it's been, like I said, transition team, transition team has been talking about it, but Trump hasn't approved it, or, you know, I guess at this point in time, he's heard about it, but hadn't heard about it. But Ryan, you made a good point, and this is one thing that I want to talk about is
how do you alleviate, sorry, good morning, Blake.
Inflation.
How do you alleviate inflation pressures by increasing the price of products?
Right, but help reduce the shock and inflation shock by putting out 10%, instead of doing 10% right out of the gate, which Trump wants to do. Instead of doing that and coming in a little bit less, that will increase every month, will help reduce the shock of inflation. It's still going to come. It's just, you know.
Yeah, you're
But
going to
that-
get the same inflation exactly. It's just going to, you know, accumulate slightly slower, but the end result and in the grand scheme of things is going to be the exact same one, right?
Right, exactly. But what the market is pricing, this is the whole conversation that we have around interest rates or anything else. It's all about expectations, right? I believe right now that the market is expecting somewhere around a 7 to 8% tariff. That's what you know, I've read from a lot of bank analysts, and I think those are expectations that are currently in the market, that at least priced in the market, somewhere in that neighborhood. So if you're talking around 2 to 5% a month, and that to increase, you know, over time based on what he's negotiating, which will end up being like a currency by currency or country by country basis. The impact might be a little bit less dollar positive. And that's what the euro was reflecting yesterday. And sterling and Aussie, that right when that article came out, that's what was happening. We're starting to see the dollar weakness. Now the dollar has, you know, bounced back, you know, obviously ahead of producer prices today and CPI tomorrow. But the fact of the matter is we are now in a situation where we're probably going to see a lot of two-way price action ahead of the inauguration. I was telling our traders yesterday during the daily roundup and the morning edge, which are private shows for the Forex Analytix traders, I'm like, once we get past CPI tomorrow, you're going to want to be really careful with dollar positions. I think we need to start taking these next couple of days to reduce our exposure to the dollar, because inauguration is on Monday, and we don't know if, you know, there's going to be headlines like literally after the, you know, Trump administration takes over. Could be days after, it could be a day after, it could be, you know, 6 hours, who knows. But the volatility is going to come when those headlines come. And that like I said, these next couple of days are going to be really crucial for currency traders, in my opinion, to reduce exposure ahead, or unless you have a very strong view on what you think is going to happen, which my experience with the Trump administration is simply we have to be more reactive than you know, trying to anticipate what's going to happen. I think there's going to be a lot of moves to come following whatever tariff announcement we get. There's going to be a lot of volatility, and we probably have to just trade the reaction regarding that. Anyway, I wanted to go into that this article because this is what was driving currencies at the end of the day, early Asia yesterday. Ryan, what do you have to say about, you know, this economic plan that you're seeing from the transition team and the lack of response that we've heard from President Trump at this point?
Yeah, that was the first thing I did this morning when I saw those headlines, is go and look at his Truth Social account to see if he'd issued a denial or something, exactly as we got last week with the WAPO post. It's different because it's more talking about this is what they're discussing, and they're probably discussing 100 different options. So there's, you know, maybe there's not something to deny there specifically. Don't ask me how a country is going to administer putting tariffs up on incoming goods every month and doing all the paperwork for that. That seems just like a bonkers idea on the face of it. For businesses, for the administration, you know, customs people or whatever. But it's another situation where I think you've got to look at it from one aspect. Okay, Trump, since he started campaigning to become president, had a big stick of tariffs. Okay, and he was waving that stick every 5 minutes, 200% on China, 100% on Mexico, blah 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 blah. He's not going to change that rhetoric until such time as he gets in the hot seat. And I don't even know if he's going to change that rhetoric when he does that. It will open the door for negotiations. So I think any stories that come out that say Trump is dialing down on tariffs, there's a big risk that he goes against that.
You have to fade it, right? I mean, he's gonna sound like he has to come out hardline on up until day one, he can't just fold and say,
Oh yeah,
yeah,
I'm
you
never
guys,
going to do 2%. Yeah, he's not going to do that. He just shoots himself in the foot. So he's going to go hard until he actually comes out with his little pad
Yeah,
and says, "I'm doing
and if he
200%."
folds, he has to do it in a way that you keep face. For example, you remember the whole fuss with renegotiating the NAFTA, the Canada agreement, right?
Yep.
I mean, they changed the name. They changed less than 5% of what the previous one was. And then he presented it like, there we go. We just tore apart a horrible trade agreement. And now we have the best ever in place.
Yeah. But
And,
he's got everyone
the
around the table.
difference was, less than minor. But it's all marketing, right?
Yeah, I think what happens is he's going to sit down on the 20th or day after, whatever it is, and go, right, this is what I'm going to do with China. I'm going to hit them with 200% tariffs by such a date, unless they do X, Y, Z. That's the way it's going to go, and then that gives China the ability to come to the table, have a meeting, and then they thrash something out, and it's 5% tariffs or whatever. But I think
Sure.
that's how it's going to go. It's going to be threat, threat, threat until people come to the table.
So threat, threat, threat would equate to dollar strength, dollar strength, dollar strength. However, that would also equate to equity market weakness. And if there's something, in my opinion, that will get the attention of the current administration, or the administration to be coming in, Trump specifically, he measures himself on equity markets. So if we see threat, 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 and we see the S&P do something like this and give up a quick 10 or 15% based on threat, 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 do you think at that point in time he's going to have to dial back his rhetoric, because equities will be under pressure and he will not be happy with that?
No, because I don't think that happens, because he's not going to go as big as his threats say if people want to negotiate. So if he says, right, 200% on China, China comes back and go, okay, Mr. Trump, we'll have a discussion, and it comes out tariffs are only 10%, which is what he was aiming for in the first place. He doesn't have to do anything. Stock markets will rally
but
anyway.
there's a lot of lag time between that, Ryan. I mean, if he says 200% and then we're waiting for China to respond, that could be like literally a week, and that could be a week of S&P down in correction territory. You know what I'm saying?
Yeah,
Then
although
you've got to
somebody
ask-
can add here that Trump is not going to be seeking re-election. And even if he was, 4 years down in time, nobody's going to remember if there was a very, very short time period of an equity market correction. I mean,
Exactly.
even having to do with election, people are going to be judging based on where the indices in regards to how much that plays a role in making choices, right? Where the indices are going to be then, not where they were 3 years and 10 months prior to the election time, right?
Yeah, he'll worry if equities are off 50%, not if they're off 10%.
Yeah, I believe so as well, because it's extremely early in the presidency anyhow.
Yeah. Well, yeah, he hasn't even taken office yet, so it's going to be interesting. Yeah, let's real quick, this is a great conversation, which I'm sure we're going to have plenty of these conversations over the course of the next week and a half.
It'll be tough to keep politics out of it.
Yeah, yeah, Dale, we try not to talk about politics unless
we just did for.
I never
unless
try
it
not
affects the
to talk
markets.
about politics. I think it's unavoidable, because economic policy and politics are intertwined, like it or not.
Right.
Yeah.
Now, I'm not going to run around, Dale, and tell you that, I hate Trump or I love Trump. I'm just going to say that his policies are going to greatly influence what we're doing in the market. So we have to talk about it.
Well, it does feel a little surreal to me that we're having a big discussion about tariffs, because my whole career, that was really kind of a word that I believe most think triggered the Great Depression, a trade war. So it's kind of surreal.
Yeah, and I mean, could it do it again? You know, that's going to be really interesting. I find what's interesting right now is the lack of response in the equity markets to everything that we're talking about. We saw the S&P bounce. This is,
Yeah, I
you
was
can
going to
see when
ask
the
you.
futures open, they gapped up, right? That was following that article.
Yeah.
They rallied in Europe and they've given
Yeah.
back all those gains already. So
But
the
we're above
markets,
the breakdown, right? Does that mean anything to you?
I mean, technically, I was like, well, shoot, you can't be bearish, but then, you know,
Yeah.
here we are starting to roll back over again. So, you know,
Yeah.
I don't know, Dale. I think this
Tough call.
volatility is, what's that?
Tough call right here.
Very, very, very much so. It is very much a tough call. And I think calls are going to be very tough until we can get some clarity on, you know, January 20th or 21st or whatever day it
I'm
ends up being.
waiting for them to ring the bell so I know when to go in.
Hey, you know what we're doing here in ForexAnalytix is a lot of us are trading cross rates now, and I'm gonna
Cool.
jump on Ryan's bandwagon here, and we started shorting the Aussie. Well, I started shorting, and a bunch of us did yesterday. Started shorting the Aussie Kiwi. Actually, Lucas in our chat room, he was talking about this, and I don't necessarily you know, look at this as a head and shoulder pattern. However, that 618 is holding, and I do believe the 200 DMA is going to be pretty key support. And I do believe there's room for the market to start pricing in an RBA cut. Now we do have Thursday morning in Australia. We have Australia employment, so that's going to be pretty important for this pair. But I think technically, you know, we can all agree that there's a nice false breakout on the upside. We failed at the 618 retracement. That's why I was shorting it yesterday up in the
Nice
70s. Yeah, and Ryan, I know you've been playing this one to the short side, and like I said, you know, maybe we have a little bit of luck here where Australian employment's a little weaker, you know, due to maybe this Asian China slowdown, and we get a little bit of downside here. What are your thoughts with the Aussie Kiwi?
Yeah, I'll take whatever it wants to give me. If it goes my way, it needs to get under this 110.20 and more so 110 even. Just that period, sort of early December, it's been in an uptrend. The first sign was that it didn't make a new high after that Jan 3rd high. So it held just below that high, which, you know, broke the pattern. But we've still got higher lows, and until that starts breaking down, then it's still marginally bullish in the short term.
Very, very minor uptrend. Kman, I know you've been having microphone issues, but I did hear your comments regarding producer prices today. You believe that CPI should come in a little hotter than expected. We have just looking at the data here and what expectations are. Previous month over month was you know, 0.2%, and forecast same. A little bit weaker on the month headline number. Are you expecting some of the same? This is
I
pretty in
mean,
line.
the expectations are for a little hotter on the year on year. So, I think it's if everybody front ran Trump, the logic would be that if you speed up your purchases of whatever manufacturing or services products are, those people are not going to give it to you for free. So it's just a simple reasoning, really, where I thought it would be logical that it comes out a bit hotter.
Okay. And you know, obviously producer prices, you know, this is going to be a little bit of a mover. The headline or excuse me, the CPI tomorrow is going to be a bigger number, which we will be analyzing, you know, ahead of the data tomorrow. So make sure you guys are here for that when we cover that live. Real quick, let's go around the horn. Let's start off with you, Dale. Dale, what are you looking at going into this PPI number? Anything that you've got your eyes on that you're focused on right now?
Short dollar, short yen, and continue to want to sell strength in the dollar.
Okay, all right. So you called that yesterday, and the dollar does look a little struggling up here. So I mean, so maybe there's a continued reversal here for the dollar. We would need some obviously.
I'm betting on the full moon. It was a wolf moon. So
a wolf moon.
yeah. Today it was yesterday.
Yesterday.
The 13th.
Yeah, I was trying to figure out how to see it.
Oh,
I saw All right.
Wolfman Jack. Wolfman Jack.
Wolfman
All right.
Jack. All right. Ryan, what are you looking at today?
Yeah, I'm also focusing on the dollar because I've seen these decent bounces in things like cable and euro dollar. But, you know, if you look at cable now, it's already given that all back. It's down nearly 100 pips off the highs. I don't think we're out the woods yet. So anyone who's been trying to catch knives in cable, euro dollar, Aussie dollar, just be a bit careful. I don't think we might be done just yet.
Yeah, you know, I was looking at this cable where obviously we have a little double top and it plays out, gets all the way down to 121.25. Again, if you're in the Forex Analytics chat room, you're pretty well aware of that. But I have to just note one of the other things that we were talking about this morning is gilt yields still are in breakout territory. They haven't pulled back yet.
Yeah, exactly. Same with the US yields. They haven't really fallen back. This is just a minor pullback. And, you know, that cable bounce, the euro dollar bounce, very small in the bigger context.
Yes.
Yeah, you know, it's tiny stuff. It's tiny stuff. I mean, the 38.2 in cable just of the December leg is 123.73. It's miles away. Absolutely miles away.
And this is the euro. One of the things that pointed out last night in Asia, if you guys were in the Forex Analytics chat room in Asian trade, I'm like, look, we couldn't even get above the 38% retracement, and we couldn't in Europe either. And if you look at, again, equities right now are at their lows, and they're creaming lower. I'm looking at a 15-minute chart. I probably should be looking at something a little bit bigger, longer term than that. But you just look at what futures are doing. They're just moving lower. All right, Kman, what are you looking at today? What's on your radar?
Yeah, euro dollar still, I think it's still a sell on rallies for now. Cable looks to be one, but I completely missed that one. What I kind of find interesting is, again, we saw this bouncing in the Aussie and the Kiwi, and it's all fizzling out relatively quickly. Especially the Kiwi went like flying at some stage up to 56.30 and then got completely smacked down again. So the market still hasn't given up. So yeah, I think for as long as the market is trading it that way, who are we to stand in front? So yeah, dollar dips still seem to be bought right now, and until next week perhaps.
Yeah, and again, I think it's all going to be about the 20th and 21st, which will be Monday and Tuesday next week. Steve, we got just a couple of minutes. I'm going to get ready for the data, but anything that you really are focused on, like precious metals, crude oil, anything?
Crude oil has broken out a few days ago, and I think that has been one of the most major developments during the past few days, for sure.
Yeah.
Having to do with inflation data. PPI is, of course, a leading indicator to that. They've been moving in the wrong direction. Or at least, without argument, they have not been moving in the right direction. We're still way above target. The market, for the time being, of course, is interpreting higher inflation data as data that should propel the dollar higher because of, changes in monetary policy. So I do think there is a higher probability, of course, to have a positive dollar reaction following the data. And we remain anyhow in an ascending channel. The trend is higher for the dollar. There's no question about that.
Yeah,
so I think we should be respecting the current trends until proven otherwise.
Yeah, it's pretty significant. I mean, this I joked about it yesterday, but literally everybody was calling the death of the dollar like at October of last year. I mean, it was literally I mean, we've seen nothing but an absolute crazy reversal. I mean, obviously due to the election, but man, it's been pretty spectacular. So yeah, we'll just keep an eye on that dollar, and we must respect it. Dale, I hear what you're saying as far as trying to carve out a top, but we're still in breakout territory nonetheless. While we're up here above that channel resistance.
Yeah, I'm wrong over the 78.6 retrace, like 11.16.
Okay. All right. 111. We still have some room. All right. So here's the 10-year off to the left. This is 10-year yields. We have the dollar index right in the middle. We have the oh shit. Here we go. Damn it. What do we got?
S&Ps are rallying. Soft.
Wow.
Little softer than
Softer.
expected.
Oh, yeah.
See?
Hey, here we go, Dale. We got
Yeah.
a little bit softer data, huh?
Yeah.
All right. Now let's see what the dollar.
I would suggest you pay a little bit attention to the yearly data.
What is the year over year? What it come in as?
Year over year came in a bit softer. It's still up, but 3.3 instead of 3.5 on the headline. 3.5.
Guys, 3.3, right? That's a leading indicator to inflation. I remind you that the Fed target is at 2%. These are not good data, right? Might be slightly softer at the moment.
The market,
of course,
like
0.1 doesn't say anything because literally next piece of data might revise that higher, lower, whatever.
The market was wrong-footed looking for an aggressive number. Jim Welsh is a pretty smart guy. He was looking for a hot number, no relief. So here we go.
Here we go. All right. Well, Dale, you have an interview. Is that correct?
Yeah, Pavel's with us today.
Oh, great. Okay, I'm going to pass it over to you. I just want to mention to everybody, especially for those of you that are Forex Analytix subscribers, the Morning Edge will start promptly, and it'll be quick and concise because I've got a meeting I got to attend to, a development meeting. But we're gonna build this bias chart with everybody in about 44 minutes. So I'll see you all there.
Hey, everyone! It's halfway through the month. It's New Year's. Wakey. Get into the community. Things are happening, and things are really going to happen. If look, you can't go to the golf course and own a spider anymore. I know most people that are in here don't do that anyway, but you're going to have to be tactical. You need a community to support and learn tactics. So go ahead, wrap it. I can't believe not the whole planet has joined to trade with us in the best year of trading that's probably going to happen in my career.
I agree with that. So
let's
see you all there.
Prehistoric times. So anyway, all right. Hey, thanks, guys.
Thanks, Dale.
All right. So go ahead and sign up today. Get in the room. And, I bring people like Pavel in here because this is how I feel at Forex Analytix. Pavel, welcome back. Happy New Year. Is that if you find a fit that works for you, we're one of the only companies I know that bring people in that they would, most would say, oh, they're your competitors. You might lose a subscriber. Well, you know what? I'm willing to, take that risk. The whole team is, because we know what we offer. And also, if you find a place that works for you and you're happy and you learn about it here, we're all for that. Okay. So, just something that makes us stand out. Find another company out there that is willing to promote other people. So anyway, I'm proud of that model. So Pavel, welcome back. Happy New Year, buddy. Spreadcharts.com. Pavel Hala is with us.
Yeah, hi Dale.
How
do you
are
hear
you?
me?
I got you loud and clear.
Yeah, great. Yeah, thanks
Good
for
to
the
have you.
introduction.
Oh,
Thanks for the introduction, and
yeah,
I'm glad to be back.
Yeah, you bring good stuff to the table. That's why we've been talking for a few years. I was looking forward to hearing what strategy you have after, we're going into like new regimes of things and a little changing, although our charts will never change. Right?
Yeah,
no matter who the president is. Okay.
Yeah, and it's often better just to ignore the noise and focus on the data. So I totally agree with you.
And I thought about you when I saw that big deal China buying a lot of beans, and the beans have found all the grains look like they bottomed to me. I've thought that previously, but what's happening here in California, not far from it, is we haven't had rain. So, a lot of the Chinese know the difference between El Nino and La Nina. Okay. El Nino bye bye left. Okay. We're in La Nina, and it's already showing up in California. We're already like 4 inches below normal. It's part of the reason. And I've seen La Nina years that lead to the same type of lack of water situation in the grain belt in the fall and during the summer. So, we don't have large carryovers. China's coming in. I don't know if they're doing it. It was huge, buying beans, maybe to do it before tariffs set in. But anyway, I think that this is going to be the year of food. All the fertilizer stocks, ag stocks were really a lot of call buying going on there yesterday, and stocks moving. So it's agriculture's turn, I think, especially if we ever get a turn in the dollar back to the downside.
Yeah, that's a cool insight. I was thinking about the same topic a few weeks ago, whether it's more of a weather related or the Chinese panic buying before Trump's goes into office, and eggs and especially grains like soybeans will become politicized again with Trump. So there will be some volatility. That's for sure.
Okay, buddy. So what's top of mind as we look into 2025? What's your work pointing to here?
Yeah, so let's
share the screen.
Yeah, by the way, where do you share the screen? Looks somewhat different.
At the bottom. Still
at
at
the
the bottom.
there is Q&A. Sure, because I don't use Zoom often, and it looks somewhat differently.
Huh. On the bottom, do you see all the icons? Where
There is chat, raise hand.
Yeah, next to raise hand, share.
Raise hand. There's just chat and Q&A. I don't see any screen sharing over here.
Okay, let me try this. I'm going to share. And then I'm going to stop sharing.
Yeah, I see your screen, but I
don't see. I stopped sharing. Try it again.
I don't see. Sorry, there will be some settings over here. Hopefully.
Oh yeah, you're not promoted. Okay, thank you, Mandy.
Okay, so
I didn't promote you to president.
Okay, so
I tell you what, the trading community would be lost.
Yeah, now
without Mandy.
Yeah, thank you. So
thanks, Mandy.
I'm glad it was not a fault on my part. So okay.
The screen looks. Yeah, I don't know.
Because I'm really not using this.
I'm real high tech, Mandy. Real high tech.
Okay, so here we go.
All right, copper.
Yeah, do you see my screen? Yes,
Yeah, I do. It's up there.
Okay, so today I'm gonna talk about crude oil because I think the opinion I'm gonna present here will be somewhat controversial. First of all, for a little context, specifically in October 2020, I turned mega bullish crude oil. We told our subscribers in our platform through the research here in the app. You can find a video from October 2020 that energy is the opportunity of this decade, the best opportunity of this decade. And I think the move in energy is just starting, and there will be a follow through to what we saw in 2022. That said, I turned bearish crude oil in the first quarter of 2022, at the beginning of 2022. My timing was not precise, I have to admit it. Well, not as much in time as in price, because the final leg higher was just crazy. But I would say that the price stopped soon after, and overall, this was a right call, because the price has been moving lower ever since. And right now we are, and by the way, we are looking at Brent futures. I have a WTI below, but I think Brent is more important benchmark, especially if you are interested in international prices in the global market, not just the US. And right now we are at an interesting point, because it seems that crude oil is trying to break out, and many people are turning bullish and anticipating resumption of the uptrend, or they think that the resumption of the uptrend is imminent. And I think that's wrong. I think this is a risky call, because, as I said, I'm long-term bullish energy, but I think the conditions are not ready right now. The reason
What are the conditions that tell you the market's wrong-footed?
Well, because the reason for turning bearish at the beginning of 2022 is still valid. Back then, the situation with the dollar and rates was that if the dollar and rates go down, then that would increase the recession risk. I mean, the likelihood that the recession is imminent in the US, and that would be bad for crude oil. On the other hand, if the rates and the dollar go up, and if this uptrend crosses a certain threshold, then despite the strong economy and strong demand on the US, this strong dollar and high rates would basically crush the rest of the world, the economies of the rest of the world, especially the emerging markets. And that would, in turn, crush demand for crude oil. I mean, global demand for crude oil. So this was a difficult environment for crude oil, because you needed a certain, you needed the rates and the dollar to move into a certain narrow range for the oil market to be just fine. And that was not a good environment for any major bull run. What we got was just a sideways price action and generally a drift lower. And I think these conditions are still present. Right now, we are once again witnessing dollar surging higher and rates going up. And I still think these two effects will eventually crush emerging markets economies, unless they turn lower. And if they turn lower, then there has to be some reason for them to turn lower. And one such reason could be the US recession, or at least rising likelihood of US recession. And then once again would be negative for crude. So this is a difficult environment for crude. And I was thinking about it a few days ago.
Because the technicians are calling it a breakout. So, I heard Steve say it, I don't know where the breakout level is. I'd have to look at my chart, but this recent push, I think, on that move when there were more sanctions put on Russian oil, that's what triggered it. That move from 76 to 81. So what do you see technically there? That maybe this is just a correction. We'll peak out here between here and 82 and start heading lower.
Yeah, I mean, my call is for an imminent peak in crude oil and move much lower. I think we will make a lower low on crude oil. Once again, this is a risky proposition.
It's gutsy. I like it. Okay, so how do you manage the risk on a bearish WTI? Because that is contrarian here.
Yeah, I think the most obvious way how to trade this would be through options, through either better call spreads or on the put side through options, you know, to limit the risk. Although the volatility has increased a bit,
So
so
options
maybe
are
the
more expensive. You have
so
to
yeah, so maybe the better
write
call
something.
yeah, better call spreads might be a good way to catch both the higher implied volatility and some downside on the price itself.
Yeah.
But that would be the strategy. But I want to go back to the thesis itself. And I mean, I have two charts that will explain my logic. The first one is this one. And by the way, I already, or our premium subscribers already saw this chart in the New Year's Outlook. And this is the chart where in the middle is the inverse chart of the offshore renminbi futures. It's inverted because the contract itself is basically the USD CNH. So when I invert the price, it means that when the curve goes up, the value of the Chinese currency increases. And above is the copper futures, and below on the bottom subchart is the WTI crude oil. And I highlighted two periods when the Chinese currency, the renminbi, was very strong. And if you compare the same periods on copper above and crude oil, you can see that this strength in Chinese renminbi perfectly corresponds to the bull markets in crude oil. And let's take a look at what is the Chinese yuan, or basically the Chinese currency, doing right now. And it is not encouraging at all. It's basically testing the lows, and maybe there will be a breakdown, maybe not, who knows. But this is definitely not a sign of strength. And the logic behind this chart is really simple. When the Chinese currency is strong, then the Chinese economy is strong. There is no need to intervene, devalue the yuan, or do anything like that. And that's the best environment for cyclical commodities like crude oil or copper. And right now, the move in the Chinese currency goes against the move in copper and both crude oil. So that's one side of the things. You know what I told you when I said that the rising dollar and U.S. rates crush global demand for cyclical commodities like crude oil. So this is basically this phenomenon visualized through simple charts. So that's one thing.
Okay.
The second thing, the second phenomenon is that I said in 2022, I guess, that there is a very low chance of a sustained bull market in crude oil without strong demand for products in the US. And the best way, or maybe the simplest way to measure this demand for products is by using these crack spreads like this one here, because sometimes the gasoline is stronger, sometimes it's diesel, like right now, for example. But overall,
Heating oil,
yeah,
oil.
exactly. So overall, this is the a balanced way how to measure this demand for products. And despite the breakout on crude oil, these crack spreads are still heading lower, making lower lows, and so on. So there is no strong demand for products in the US. So we have US dollar crushing and US rates crushing global demand for energy, and we have weak demand for products in the US. And this is not an environment that's conducive for a major bull market in crude oil. So these are two important reasons why I think this breakout in crude oil is false, and it will fail, and the price will move much lower and make a lower low. So
Yeah. Getting back under 75 would be negative.
yeah, let's get back to Brent. So we speak about the same thing, and I think when I zoom out,
Well,
I think
I have a line in WTI. It's on a weekly chart that
Mhm.
had I've been looking for 62 for a year.
I know. I saw that
Oh,
on
okay.
Twitter or X or
Okay.
whatever.
Yeah, whatever it is.
I
Yeah.
remember your call, and I don't have any specific target in mind because, in my opinion, it's very hard to guess an exact price a year in advance or many months in advance. I always prefer to look at the current market conditions, but I think we will get a
Well,
breakdown on.
you need to learn to draw lines that are magnets.
I know, but
Magnetic lines,
yeah, I
man.
know, but let's say that
Uh,
it is just very subjective. There are
I
many
know.
ways where to draw these lines, and everybody has a different opinion where that or this line should be. So I always prefer to stick to the current market data. But let's say I was thinking a few days about this, and I told myself that uh, imagine that we have a recession soon in the US. I am not saying that we will. Uh, just imagine that we have a recession starting a few weeks from now. What do you think crude oil does in the current supply-demand environment? And I think you will agree with me that in such a scenario, crude oil will be totally crushed. Okay.
Okay.
And when the time comes when I will once again go all in to energy like I did in October 2020, I I think the environment should be such that when I think about the potential recession in the US, then I would say, the supply demand in crude oil is so tight that maybe the price will just drift lower or stay sideways. And that's exactly the time when I will start buying energy in size. I'm not saying that there will be a recession or there has to be a recession. It's not about the recession likelihood. It's about the supply demand situation from the global perspective. And when you take, OPEC spare capacity and US shale into account, I think there is no doubt that the supply demand conditions are not ready, for such a bull market. You need price and time to act on crude oil market. So you need reduction in OPEC spare capacity. You need some cracks in US shale output, these problems that everybody is talking about for and has been talking about for years. Maybe some of that to start showing up in the data. And only once we see these fundamental shifts, then I think the conditions will be ripe for turnaround in crude oil. And basically, we need lower prices to achieve that. Lower prices over a sustained period of time to get this turnaround. And we are not there yet, simply said.
All right. Really interesting contrarian call. I mean, to me, with recent action and insightful. And I look at that 70 area on that chart.
Mm-hmm.
There'll be a panic under 70. Look how many tests. It's
Yeah.
been holding for a year. And then you look left, man, that's important.
Yeah,
So,
that can be
yeah,
crazy. I mean, this
yeah,
is a medium term call
yeah.
because in the short term there are some,
Positive
tailwinds for crude oil,
seasonals.
like the strong seasonality. But I would not trust seasonality in the current environment. But
Okay.
I have to admit this is a tailwind for crude oil. On the other hand, I also watch the contango, or specifically backwardation in this case, on the
Yeah.
mid part of the curve, not on the front end, which is the most common way to visualize this. But I think it's very noisy and susceptible to speculative flows. So I prefer to take a look at the middle part of the curve, in this case, the backwardation between the fourth and the seventh contract in Brent. And we are
Yeah.
we are approaching 3% backwardation on this part of the curve, which is above the normal range over the past 2 years. So the crude oil is getting stretched from this perspective. Here is the chart of the crude oil itself
Yeah.
compared to the backwardation. You can see that they are positively correlated. And even if we take a look at, for example, the past 20 years, which roughly corresponds to the shale era, well, the impact on the market only started in or after the GFC, but the technology itself was or started to have a meaningful impact roughly 20 years ago. And you can see that once again, we are currently approaching 3% backwardation, which is above the 95th percentile over the past 20 years. So even from this perspective, this metric is telling us that the crude oil market is stretched. And unless this is really the beginning of a new bull market or resumption of the bull market, then it is very likely this will mean revert and move back towards zero. So that's one additional thing I'm watching right now. But the two most important charts, as I said, is the Chinese economy measured by Chinese yields. You know, the Chinese Chinese yields are tanking and in effect
they're
Chinese
letting
currency.
it go, aren't they? They're letting it go.
Yeah, there's basically
people were always worried about China just letting it go, the yuan go.
Yes, they definitely have deflation in China, and it's not exactly a free market economy. So the manifestations of their economic problems are different than they would be here in the US. But the currency data and the yields, they don't lie. So they definitely have huge problems with their economy. And of course, they can stimulate, they can, push major stimulus tomorrow. You never know. But if they do, the Chinese currency would go even lower, in my opinion, because they would have to devalue. And once again, that would not be positive for these cyclical commodities. There could be a short-term rally, of course, but in the medium term, as you can see on this chart, you only got rallies or bull markets in cyclical commodities when the Chinese yuan was strong, which means that the Chinese economy was strong fundamentally, not by some money printing spree. So that's one thing. And the second,
so you would also mistrust this copper rally too, then.
Yeah, for sure. And by the way, last time no, it was not with you. It was with Blake. It was I remember it was here in this consolidation at the beginning of October, and I was bearish copper. You can find the video. Everyone can find the video on your YouTube archive.
I believe you.
Yeah, and it played quite nicely.
Nice.
Because of the same things and the same phenomenons I described today, and I think they are still in play. When you look at the chart of the Chinese renminbi, it's still heading lower, and so yes, I think the copper will most likely move lower too. But that's I think the risk reward actually the copper market is quite washed out, and we also have I guess a long signal in our by our machine learning model. So I would not short copper here. Maybe it can move higher in the short term. So I would avoid copper here. I'm not wanna say that I'm bearish copper. I'm saying that I'm bearish crude oil. So that's it.
I'd call you strongly neutral on copper.
Yes. Yeah. So, but once again, this is a risky call. I might be wrong, and but that's what the data. You
want to hear some CNBC analysis? Leave that chart up. Okay. Copper could be very constructive should it move up to trade to 450, unless it declines first under 420. But if it does that and then recovers, it could go higher unless that fails, and then I'd look for lower.
Yeah, that's very.
Huh? What do you think? Is that actionable?
No, that's not actionable at all. And I have,
For your broker, it would be.
yeah, I prefer to watch intra-delivery copper spreads for short-term
Yeah.
timing. They could be very helpful. And yeah, there was a bounce in these copper spreads, but they have turned down yesterday. So I don't know. This is inconclusive. I
Okay.
don't have an
Uh,
opinion. There,
I know your convictions on WTI here.
yeah,
All right. So people want to follow you and how you're managing or confirming price action going forward here on this trade. How do they follow you?
Okay, so they can go to our website to spreadcharts.com and here we go, I hope. Yes.
There it is.
And they can sign up for our software, which also, I mean, the software, it's not just software, it's also the signals by our machine learning model, which are not trading signals, they are just for, notification that there is something interesting happening in this market or that. And there's also the premium research I just mentioned, which you can also find in the app. So it's all there. You can sign up, and yeah, I think this will be a pretty interesting trading environment. I think the best opportunities in the coming months are elsewhere. This is something we revealed in our New Year's outlook. I actually see three interesting opportunities. Two of them are certain sectors or industries in the stock market outside commodities. And yeah, so you can sign
Yeah,
up
check it
and
out.
watch our New Year's outlook and find out where we do see opportunities. And as I said, I don't think there is an opportunity in energy right now. Not just yet. Not just yet. Let's
Okay,
say.
so here's my takeaway, and it's a nice tagline you could use. Don't let oil be your foil. All right. So really appreciate your great work, Pavel.
Thanks, Dale.
And
And
good to talk to you. And I hope you and your family and your subscribers all have a great year, and that pips just run you down like a tsunami.
yeah, thanks, Dale. And
All right,
I
man.
wish you the best too.
All right. Pavel Holla, everybody. Great work. Follow him. No risk on trying that, trying the software out, and very reasonable price. So that's a wrap. Don't just count your oil barrels, count your blessings. See everybody tomorrow. Oil can foil your trades. You like that?
Yeah,
Okay.
it's a cool tagline.
Yeah, by Pavel Holla. All right, everyone. You could join the team in about 13 minutes on the Morning Edge. Thank you, Pavel. And thank you, everyone, for hanging out with us. See you tomorrow. Adios. Thanks again, bro.